Okay, I've been waiting on this one because the results were today. There was a stress test that was, the results were going to be concluded today. Yet you weren't told that, were you? Yeah, because you were too busy on Judgment Day. Well, my judging says you were wrong. Very wrong. And you will continue to be wrong until you actually start trying to learn. Now, what is the Fed stress test? Let's take a look. By the way, it's always good to be above the narrative, not a part of it. It makes life a lot easier. Now, June 6, 2022, Fed Reserve Board announces that results from its annual bank stress test will be released on Thursday, June 23rd at 4:30. This was released today. So they've been basically conducting their stress test. They have different scenarios. They have what's called a basic scenario that we're going to go over here, and then we'll get into the second scenario. So basically, Fed Reserve Board announced today that results from its annual bank stress tests will be released on Thursday, June 23rd at 4:30 p.m. Eastern Daylight Time. Stress tests help to ensure that banks have adequate capital to absorb losses so that they can lend to households and businesses even in a severe recession. They evaluate banks' resilience by estimating losses, net revenue, and capital levels, which provide a cushion against losses under a hypothetical recession scenario. This year's scenario includes a severe global recession accompanied by a period of heightened stress in commercial real estate and corporate debt markets. Banks with more than $100 billion in capital, otherwise known as GSIBs, globally systematic important banks, in total consolidated assets, are subject to the board's stress tests, with larger banks required to participate annually and smaller banks required to participate every other year. This year, a total of 34 banks participated in the stress test. Now, the table below shows the components of the test that apply to each bank based on data as of last year, September 30th, 2021. So these are the banks here that did not meet expectations. You have Bank of America pushing Evergrande default narrative. Barclays, I don't think so. Citigroup pushing Evergrande narrative information. You have Credit Suisse and DB USA. Of course, that's to be expected. You also have HSBC, JP Morgan, M&T Bank Corporation, Morgan Stanley, and State Street. Now, State Street is the only one of this list that is only subject to counterparty default, not subject to global market shock. And by the way, I don't know if you saw what happened last year, but a lot of that came to fruition. Now, this is the supervisory scenario. So, scenario timing and variables related to this is the scenarios start in the first quarter of 2022 and extend through the first quarter of 2025. Each scenario includes 28 variables. This set of variables is the same as the set provided in last year's supervisory scenarios. The variables describing economic developments within the United States include 6 measures of economic activity and prices, quarterly percent changes at an annual rate in real and nominal gross domestic product, real and nominal disposable personal income, the consumer price index for all urban consumers, and the level of unemployment rate of the civilian non-institutional population aged 16 years and over. 4 aggregate measures of asset prices or financial conditions, indexes of house prices, commercial real estate prices, equity prices, and stock market volatility. 6 measures of interest rates, the rate on 3-month Treasury securities, the yield on 5-year Treasury securities, the yield on 10-year Treasury securities, the yield on 10-year BBB rated corporate securities, the interest rate associated with conforming, conventional 30-year fixed rate mortgages, and the prime rate. The variables describing the international economic conditions in each scenario include 3 variables in 4 countries or country blocks. The 3 variables for each country or country block: quarterly percent changes at an annual rate in real GDP and consumer price indexes or local equivalent, and the level of the US dollar exchange rate. Then you have 4 countries or country blocks: the Euro area, the 19 European Union member states that have adopted the euro as their common currency, the United Kingdom, developing Asia, the nominal GDP weighted aggregate of China, India, South Korea, Hong Kong, Special Administrative Region, and Taiwan, and Japan. Now, the baseline scenario. The baseline scenario for U.S. real activity, inflation, and interest rates is similar to the consensus projections from 2022 Blue Chip Financial Forecasts and 2022 Blue Chip Economic Indicators. The near-term component of the baseline scenario is similar to the January 2022 release, while the long-term component of the baseline scenario is similar to the October 2021 release. It is important to emphasize that this scenario is not a forecast of the Federal Reserve. Again, hypothetical. The baseline scenario for the United States is an economic expansion over the 13-quarter scenario period. The unemployment rate declines gradually from close to 4.5 or 4.25% at the end of 2021 to about 3.5% by the end of the scenario. Real GDP growth declines from about 6% at the end of 2021 to around 2% at the end of the scenario, which again is 2025. CPI inflation also declines from around 8.25% at the end of 2021 to about 2.25% by the end of the scenario. The percent to about 1.5% at the end of the scenario. The scenario includes increases in interest rates, which is big. The 3-month Treasury rate increases from around 0% to about 1.5% at the end of the scenario. 10-year Treasury yields increase from around 1.5% to around 2.5% at the end of the scenario. The prime rate increases in line with short-term interest rates, whereas yields on BBB rated corporate bonds and mortgage rate increase in line with long-term interest rates. Then you have the severely adverse scenario. Now, the severely adverse scenario follows the board's policy statement on the scenario design framework for stress testing and is characterized by a severe global recession accompanied by a period of heightened stress in commercial real estate and corporate debt markets. In this scenario, the economic downturn is amplified by the prolonged continuation of remote work, which leads to larger commercial real estate price declines that, in turn, spill over to corporate sector and affect investor sentiment. Well, doesn't that sound familiar? The developments in foreign economies reflect greater stress in emerging market economies, partly driven by building risks in the Chinese economy. This is a hypothetical scenario designed to assess the strength and resilience of banking organizations and does not represent a forecast of the Fed Reserve. So that's what the stress tests are all about. Now, this is where it gets interesting because, again, I've been trying to tell, especially you, Boss Blunts, because you know this debunks your entire narrative about China and somehow being related to AMC and GME. And I mean, now you're associating executive orders that, again, you were wrong, but your supporters are still on your nutsack because I guess they don't know how to think for themselves. Sad world. The 3 red lines destroys your entire argument because, again, what did we just read? China's 3 red lines did what? Which is over now. What did it do? Not only does it say that, the prime brokers think that the policy is a positive market development for bond investors in the long term. From a valuation perspective, they believe current levels are highly attractive in the real estate space. Of course they are. Because when something goes down that much and there's a hype narrative put on it with no backing, obviously that's the institutions trying to get in at the bottom while they scare away all of the people who can't think for themselves out of the opportunity, which is exactly what happened to a lot of people. And it's sad. Because you're letting a guy who has no integrity turn you away from a real opportunity while he leads you blindly into nothing. So, again, it's a sad world. And he has no argument against this. Not one. Not one. And Metzler is a fraud as well. Now, let's look at the 2022 scenario. The 2022 global market shock component for the severely adverse scenario is characterized by a sharp curtailment in global economic activity, a tightening of financial conditions, and a worsening of existing supply chain disruptions, an increase in term risk premia drives, an increase in treasury rates, and a steepening of the yield curve. Benchmark bank lending rates rise sharply, reflecting tighter financial conditions. The drop in economic activity and additional supply chain disruptions lead to lower corporate profits, resulting in substantial public equity price declines and increases in public equity volatility across global markets. The US dollar appreciates against the currencies of emerging markets due to substantial flight to safety flows and appreciates more modestly against the currencies of most developed economies, while the yen appreciates against the US dollar due to the unwinding of positions. The strains on supply chains more than offset the impact of weaker economies' activity and lead to price increases across commodities. Now, again, this came out 5 hours ago. I remember Metzler likes to quote Reuters about China Evergrande. Why then now are they disagreeing with everything you say? And why do you have, seriously, people, if you think Marco Metzler is anything but a fraud, you're going to take this as DD? This is DD? But yet when I go to Google and I type Citigroup Evergrande default, or Bing, whatever the hell you want to call it, where's the news article that came out yesterday supposedly? It doesn't exist because these motherfuckers are lying to you. I mean, how much times do I have to be right about this shit before you stop looking into the darkness and turn your head and look to the light? They're fucking wrong. They have nothing at all except this shit. Is that his hand? Is that his? No, it's not. I mean, look at the picture. It's a stock photo. It says Alamy on it. I mean, come on, people. This is getting ridiculous. Citigroup default now finally officially confirmed. No. This was confirmed last year, mofos. The only thing that was true in that document was that Fitch withdrew the ratings because no one knows how to rate them anymore. Because guess what? The Chinese 3 red lines policy was a credit re-rating opportunity. And now, since they're undervalued and there needs to be price discovery, guess what? They're going to pull their ratings. That's all it is. Look, Evergrande officially defaulted. DSMA is preparing bankruptcy proceedings. So what happened to this, Marco? What's going on with this? Why is your website not loading? I thought you had a court case with Evergrande. The guy's full of shit and you're all eating it up. Don't be mad at me. Be mad at yourselves for listening to it. There's not any evidence backing anything these people are saying. And again, how many times in a row do you have to see that they're wrong before you're going to stop buying their bullshit? He was wrong today. He was wrong yesterday. Look, let me show you. On my Discord, look at this guy at the extent that this mofo spent last weekend or over the weekend trying to convince you that something was going to happen today. And guess what? He was wrong again. When are you going to hold him accountable for the claims he's been making? Because again, he's wrong. This is your time, your money. Are you really going to keep letting him sell you this easily? Because again, he was on a rampage all weekend, into the world, blah, 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 knows nothing about anything. Come on, people. It's time to wake up. It's time to ask the important questions. Why, Dr. Metzler, is there no information on you anywhere? Why do you leave cheap-ass DD that has no no verifiable way to make sure this is even accurate? What, I mean, and not only that, the paper that he's showing here is dated April 29th, 2022. I mean, come on. You gotta see it. If you don't, I mean, for God's sake, it's a sadder world than I thought. But hey, I'm gonna keep moving forward in the right direction. So you're welcome to follow me at any point in time. But if if you don't like what you hear, you gotta grow up. Your feelings don't matter. Unfortunately, what matters is the truth, and you have none of it at your disposal. All this time, and what do you have to show for it? Nothing. So come on, wake up.